Bitcoin is a resilient asset that is really serving as global insurance. And so anytime that there's chaos in the world, there's going to be people who run to Bitcoin. Gold also serves as that use case, but I think that more and more people, especially as young people get a little bit older, they get a little bit more money, they start to go and they buy Bitcoin in times of uncertainty. These two assets, they serve as a store of value. And I know that the gold bugs have been doing their victory lap for the last year, but I do think that Bitcoin is a 10x better asset in terms of it is more divisible, it is more mobile, it is much more resilient than gold. And so I think that over time, what you're going to see is you're going to see more and more capital flow into Bitcoin. And look at the ETFs. What took gold's ETF 15 years to do, Bitcoin has done in less than 2.
In today's global financial environment, investors are confronting a unique combination of geopolitical tension, technological disruption, and macroeconomic uncertainty. Traditional assumptions about inflation, economic growth, and safe haven assets are being challenged simultaneously. In this environment, Anthony Pompliano presents a bold and increasingly influential thesis. Bitcoin is emerging as one of the most resilient assets in the modern financial system. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
We are going to start with Bitcoin because it has been outperforming over the past week.
Well, I think there's a couple of different things, right? One is Bitcoin is a resilient asset that is really serving as global insurance. And so anytime that there's chaos in the world, there's going to be people who run to Bitcoin. Gold also serves as that use case, but I think that more and more people, especially as young people get a little bit older, they get a little bit more money, they start to go and they buy Bitcoin in times of uncertainty. And I think institutions also, what is misunderstood is that in the institutions, the young people 10 years ago, they're now rising to the role of the portfolio manager or the CIO. And so they also will start to continue to add Bitcoin into their portfolios as well. And I think you see Bitcoin performing pretty well given what's happening right now.
And yet gold has not performed particularly well over the past, call it, week.
Well, if you think about what's gone on over the last year or so, pretty much everyone who's going to sell Bitcoin off of the highs has pretty much already sold, right? Everyone who's going to buy gold has pretty much bought. And so I think that you saw two assets that diverged, and these two assets, they serve as a store of value. And I know that the gold bugs have been doing their victory lap for the last year. I like gold. I don't hate gold in any way, but I do think that Bitcoin is a 10x better asset in terms of it is more divisible, it is more mobile, it is much more resilient than gold. And so I think that over time, what you're going to see is you're going to see more and more capital flow into Bitcoin. And look at the ETFs. What took gold's ETF 15 years to do, Bitcoin has done in less than 2. And so I think that just naturally you're seeing the rapid adoption of an asset. Now, it is going to be volatile, and I think people love to celebrate when Bitcoin falls. It's down 50%. Well, if that was the bottom of the bear market is just a 50% drawdown, then it's the best performing bear market of all time in Bitcoin's history. And so let's see what happens.
Interesting. Do you think then, in light of that and what we're seeing with Operation Epic Fury, that Bitcoin is shifting gears in terms of how it's trading? Because the conversation had been that this is, a risk-on asset. It's trading as such. It's a liquidity indicator. It's not a store of value. Do you think that this is an inflection point?
Well, I think there is a very, very big misunderstanding when it comes to what's happening in the global economy right now, and specifically with inflation domestically. If you look at inflation expectations, people have been saying that we were going to get sky-high inflation because of the tariffs. And I was very loud about the fact that we were not going to get that. The tariffs were going to be deflationary. Now, if you look over the last year or so, what we've seen is tariffs are deflationary, deportations are deflationary, AI is deflationary, and robotics are deflationary. And we see this happening throughout the economy. And so the big risk right now is still deflation, not inflation in the U.S. economy. And I understand that oil has spiked in the short term, and people are going to freak out about that. This has been going on for 8 days, this Operation Epic Fury. And so let's say that it ends in the next 2 or 3 weeks. It would have been a short-term impact to oil prices, and the deflationary nature of what's happening in the economy is still a much, much bigger concern than a short-term oil impact. And I think what people also forget is that, take housing as an example. The government is still saying that housing prices are growing. Truflation, which is a real-time measurement, is saying that housing is in deflation already. It's down 1.5% over the last 12 months. If that is true, housing is a much bigger input into the CPI calculation than, let's say, oil or energy is at around 5%. And so I think that people, it's very easy to get attracted to the headlines and the volatile oil price. But again, the structural thing that we are facing is deflation because of deportations, tariffs, AI, and robotics.
Yeah, and of course we get CPI and PCE readings this week, and this will be before any spike we've seen in energy prices. So we'll look at that according to your lines of thinking. At what point, though, if you have energy, if you have oil prices at these sustained levels, we know that funnels out into other parts of the economy. So at what point does that change, if it changes?
Well, if it's prolonged, right? If we end up going 6, 9, 12 months with really, really high oil prices, obviously that'll have a very big impact. The other thing that's pretty interesting, though, is that the U.S. dependency on oil as a percent of production, right? So if you think of like how much energy do we need to consume from oil specifically in order to produce 1 unit of GDP, that has been going down over time. We're actually lower today than we were, let's say, in 2007, 2008. There's some good research that's been put out about that. Now, it doesn't mean that we're not dependent on it at all, but I do think that people are still caught on this idea that if oil prices go higher, then immediately we get, higher consumer inflation, and I just don't see that happening in the economy.
All right, so let's put it all together. We've got a war in Iran. We've got a spike, at least for now, 8-day spike in energy prices. We've got AI disruption concerns. We've got cracks in private credit, and we have a weaker jobs report. How do you invest right now?
Buy Bitcoin.
When Pompliano was asked how he allocates capital in the current environment, an environment defined by geopolitical tension, technological disruption, and uncertain economic signals, his answer is strikingly simple: buy Bitcoin. This recommendation does not stem from a belief that Bitcoin is immune to volatility or short-term market fluctuations. Instead, it reflects his broader conviction that Bitcoin represents one of the most powerful long-term asymmetric opportunities in the global financial system.
For the last month or so, ever since Bitcoin got that capitulation into February, what we said was that Bitcoin would likely find a low in February, and then it would likely stay weak through February, and then get a rally in the first week of March. And that rally in the first week of March would in fact get rejected and to fade the first week rally of March. And just a few days ago, we got the rally. It was about a month ago. We looked at, and we the thing that's so crazy about this is how simple it is. How simple this thing has been. We look at 2026. We don't try to overcomplicate things by talking about the ISM, talking about Jane Street, whatever the narrative is for the week. We don't care about any of that stuff. It's irrelevant. The news cycle is irrelevant in this. Because despite all the crazy stuff you see happening, Bitcoin is still following the average return in prior midterm years. Look at this. Look how it dropped into February. Didn't go anywhere. Got the rally into early March and then sold off. Just like the average of all prior midterm years for Bitcoin. All of them. 3 of them, right? It's just fascinating how you can just sit around and basically be like, all right, low in February, early rally in March, fade it, not going anywhere. Now, what's interesting is if you compare 2026 to 2014, look at that. Very similar move. Rally early up, capitulate, rally into early March, go sideways for a bit, and then drop into April. That's 2014 comparison. Look at 2018. 2018, we bottomed around the same time. Just in 2018, it was a larger drop. And the reason why it was a larger drop, you said it, because back then we topped on euphoria. This time we topped on apathy, therefore the drop wasn't as big. But you see that? Find a low, sort of rally, put in that local top, head down. Now look at 2022. This one's a little different. The rally extended through late March, but it was only more or less a sweep of the early March high. So it didn't really go anywhere. Now you average them out, and you get this. You add 1 standard deviation onto that, and you get that. And you can see that despite the narratives, despite the ISM, despite the macro, despite even the price of oil and the labor market data, despite all of it, Bitcoin is doing what it always does in midterm years. And it drives people crazy, I think. I think it does. And look, guys, I don't control this stuff, right? I'm just over here pointing out what I think looks reasonable. And it just keeps on happening. Keeps on happening. It just keeps on playing out the same way that it always does. And I'm not here to say that it always will. I've talked to a lot of people, and a lot of people are like, well, why does the 4-year cycle have to exist? Just because everyone thinks it will? Will it eventually break? Probably. Do I expect that for the next 50 years, Bitcoin will behave on a perfectly predictable 4-year cycle? No. But the problem is that I think you'll get wrecked more frequently, a lot more, if you assume it will end. Not to say that it won't end. It's just that how many times will it take thinking it's going to end before it actually does? So the problem is that people that keep thinking it's going to end, it keeps not. They get wrecked thinking it's going to do something different. It doesn't. The people that keep betting on the 4-year cycle keep winning. Eventually, betting on the 4-year cycle will probably be a losing bet. But maybe it's just worth that, right? Maybe it's just worth that idea of betting on it until it doesn't work. And then when it doesn't work, maybe I'll get wrecked. But what's the alternative? Just thinking it's going to change every cycle just because we want it to? Or just going with what history shows us until proven otherwise. And then when otherwise is proven, then we adjust. You adjust when the market tells you there's a reason to. There's not really a reason to adjust if the market just keeps doing the same thing it always does, right? So, I'm not saying this whole thing has to play out till the very end, but for now, this seems like a pretty reasonable assumption of how things are going to go in the short term. So, let's see where it goes. This wick here, you know what this looks like to me? You see that wick higher? You know what it looks like? Looks a lot like 2014. You guys remember what happened in 2014? In March? Same thing. Early rally into March. Bitcoin went sideways for a week, then started to dump. And then it put in a lower low in April. You know what happened in 2018? Local high in March, and then it dumped into early April. 2022 was a little bit different, but it still started to dump as we got into April and May. So, I hope this has been helpful, because it is really difficult, when you have a lot of people watching your stuff, and then you got all these guys, these toxic permabulls that constantly dunk anytime. It's crazy because we talked about this rally, and then we got it, and people dunked anyways. So it is difficult, and bear markets make fools of both bulls and bears. That's the reality of bear markets. That's what makes them so hard, is even if you're a bear, you can be right, but it doesn't necessarily make the journey any less easier, because a lot of times in bull markets, we go up, or in bear markets, we go up in the bear market for months before we get the next leg lower, as you can see back over here. That's what makes them so difficult, is you just never really know, when that next leg down is going to occur and over how long it's going to take place. I just think that the name of the game in midterm years is wealth preservation. Preserve what you have so that you can live to fight another day in the markets when all this is over. And if you need a narrative for why this has to play out like this, and why we can't have a super cycle, and why the permabulls can't be right all the time, maybe oil. Oil is spiking like crazy. And despite the weak labor market report we just got, Fed's not really that much closer to cutting rates. So if you need a narrative, you can run with that one. But what if you don't need one? What if you don't need a narrative? What if you just need this chart? I'd be willing to pivot if we go outside of these bounds, but what? Why change anything? Now over the macro scale, the permabulls make money, and the bears sound smart and the bulls make money, but the bears are right sometimes. And in crypto, they're usually right about every 4 years. And this is that year where they're right. Starting in the fourth quarter of the post-halving year, and usually going for about a year or so. So if you are a bear, it's also important to remember that eventually we'll probably leave the bear market and enter another bull market. But as I said last month, February is a little premature to call for that, right? I don't think if you call for the bull market to start in February that you'll likely have that work out, because there's usually lows put in February, but historically they're not the low, if that makes sense. So simulation confirmed, right? Spend a few weeks saying we're going to have a rally in early March and to fade it, and then it plays out. And if it plays out like it normally does on average, then Bitcoin might not really go anywhere for a few days. It might be kind of like, what's going on? And if you look at it on here on the daily, you can kind of see that it gave back all these gains, right? And it just went back to where it sort of launched that little rally from, right back down there. So it might bounce here for a little bit, It might do something like this, but ultimately I think it probably will break down as time goes on. And it's not like I want to bring this message to you, but you're not here to hear me tell you you're not here to hear me say what you want to happen. You're here probably for me to tell you what I think is going to happen, so that you can use that to at least think about the market in a different way. I don't know. And I don't know if I'm right. But this is what I think is going to happen. I think the market will go lower as the year goes on, and I think that it's easy to label anyone that's bearish just an outright doomer. But remember, the bulls have been wrong since October. And while the bears sound smart and the bulls make money, once every 4 years or so, the bears are right.
Bitcoin is ultimately a macroeconomic argument about the future of money, technology, and financial infrastructure. In a world where geopolitical instability, rapid technological change, and evolving monetary systems are reshaping global markets, investors are searching for assets that can operate beyond the constraints of traditional institutions. Bitcoin, with its decentralized design and fixed supply, offers a compelling answer to that search.